All right, good morning, everybody. Man, it feels like a Monday. Still have a lot of Fed speakers on the table. There's still a hurry up and wait mode. We're expecting to sell into strength, buy into weakness, hold the range while the megaphone expands, waiting on this shock and awe to hit the market. It's worth noting that they're starting to mess around in the June series here. So if you kind of think back when they had to unwind some hopeful cuts that were getting priced in early to the year, they knocked those back to June. So you want to keep your eye on June. This is where they're pricing in a rate cut. And what we want to see is as more data comes in, do they unwind June, pushing it back into July, or do they continue to build it up? So you can see the 500, 525 level, this big bar. A week ago and yesterday, they were the same. So it's just been kind of sitting in a holding pattern, but they bumped it up 2% between yesterday and today. So they're starting to price in just a little bit, a rate cut for June. And we want to keep our eye out for, a consistent theme from the Fed. We got all these Fed speakers, and really they're going to ramp up more as the week goes on. And while they all try to pretend that they are their own individual, they're all singing from the same hymn book. So, you really want to catch what the story is, what the message is they're trying to push out there. But this is the month that you want to keep track of at the moment. It's June series 500 to 525. These farther ones out, if you see them starting to unwind the June series, then you can step back into July and September and see, if they're unwinding it from June, where are they putting it in at? We're mostly flat. The Russell up a little bit this morning is a part of that rotation. The UK is down the most. If we just look at it as a flat, above that, the Dow, then the S&P, the NASDAQ 100, just above 0.25%. Hong Kong and Japan also in the green this morning, not up by much. And really, this is just a hurry up and wait scenario. So we get consumer confidence at 10. It's the biggest thing on the block, but I mean, this is not overly, it's the biggest thing on the block, but it's not a really big deal, right? It's not what we're all really waiting for. But tomorrow we're going to get a lot more Fed speakers, and it's not just what they're saying, it's the potential of what they could do, right? If you've ever seen them misspeak, say something they didn't mean to say, or it was misinterpreted, the reporter took what they said and kind of twisted it out of context, and what that does to the market, it's almost flash worthy, right? Like it can move markets extreme really fast, and then they have to settle back down again afterwards. The algos latch on to that kind of keyword, even if it's a misspoken keyword. So whenever you have Fed speakers talking, there's always that potential. It's like watching NASCAR waiting for a train wreck, right? Waiting for a crash to happen. It's a little bit like watching the Fed when they do those live pressers and take questions. There's always a chance that they're going to just wreck the car. So we got consumer confidence, a couple of Fed speakers, some housing data. Through the overnight, we're going to get more out of Japan. Then that gets us into tomorrow. But really, this week is a hurry up and wait week. We get later in the week, we're going to start getting the data that the market's looking for. And if you were reading out that Spot Gamma founders note, they're already talking about the March OPEX, options expiration. It's going to be a triple witching on the 15th of March. So we've got the Fed right after that on March 20. Right, the March is going to be a really big deal. We're going to be halfway through the QRA group, right? We get QRA and then a March FOMC and then a QRA in May. So we'll be around that halfway point. We'll get through OPEX and we'll get right into looking at the Fed through FOMC. So this calm before the storm. Another tell, right? You go to Finance Juice. If you don't have an account here, you should definitely get one. It doesn't cost you anything to have a free account. And if you have a free account, you can use the settings to eliminate news you don't want to get, right? MSNBC, CNN, Fox News, just turn all that junk off so that what you have left is news that can actually move the market and get you kind of set up for the day. A lot of times people ask me, well, how did I know it was a sideways day? Or how did I know we were waiting on something? A lot of times you can just read it right there. You don't have to check the overnight volumes. You don't have to do anything more than just see what was going on last night. They'll do a market wrap for you. They also do one after we close. So at the end of the trading day, if you're looking back on the day trying to figure out where a move came from, say midday, we just drop really hard or we spike really fast and you don't know what happened, why did we move? Wait until the end of the day. They'll do a market wrap for our market, kind of give you a little bit of heads up on what the move was. Not always. Sometimes there's moves we just don't know what the heck happened, but it's a good way to figure out what the why is. So they'll do a market wrap for Europe, but then they'll also have a write-up in here for today's open. So it's just it's free. It doesn't cost you anything to go here, and you get a list of economic events. Finance Juice does a really good job of listing Fed speakers that kind of show up at the last minute. So when we come back here and we're looking at all these others, say FX Street or Market Watch, they might have one Fed speaker on here, maybe two, but a lot of times they're not going to catch all of them. It's why we check multiple sources, multiple places. Each one of these has their own agenda. FX Street does really good giving us that global perspective of all the different nations and their economic events. But you go to something like Market Watch, it's only giving us the US events. It's not giving us anything from around the world. So they all have their purpose. I see Yellen is out chipping her teeth this morning too. So we got a really big rotation here. This is growth versus value, just using the Russell IWF versus IWD. We closed down here with that doji, and this morning we're sitting all the way up at the highs. That's a very aggressive move. Even though we're expecting a range-bound index, it doesn't necessarily mean that we're going to get range-bound equities. And this is a big move this morning. So 8:30, 9, 10, 11, and 1. That's more than enough for anybody on a day. Just keep in mind, these aren't the big ones, right? We've got bigger events coming on the week, and we've got a lot more Fed speakers tomorrow. So we're still looking at really low volumes today. We're under last week's close. And right now we're sitting inside of yesterday's price back above the daily pivot point. So we didn't get an MDP yesterday. We actually hit it. We are underneath it. We got that crossover. And we're closer to the upper ADR than the lower ADR. So we're starting to build up an IX10, but we need another day for that. Right now, we're just inside day. Getting out of yesterday's price action is going to be the number one thing. Right? It was the same thing yesterday when we were looking at Friday with that doji day. We really needed to get outside of Friday's range before we had anything really to trade on. So once we finally did get out of there, we had some decent runs. Same thing today. We got to get outside of yesterday's price action. And it's a small day. So we have the expectation of playing the range. We expect that range to widen out into more of a megaphone pattern as we get towards the end of the week until we get our data point. It's just not going to be very good trading if we're stuck inside of a very small range. Now, one thing about being stuck inside of a tight range like this is that the market is going to build up energy. It's one thing that we know a market does when it's stuck in that tight range is it will build energy. We're back above the volatility trigger. We're still holding above the 3-week moving average. We're above the weekly pivot point, but we're not too stretched out. And we're closer to the upper ADR half than the lower. 5111 is a cog line. It's also where the call wall is at. That would be an inside day breakout anyways. We'd have to get all the way back up to the top of yesterday and then break out and then get into that call wall. It's hard to see a path through that call wall at this point. We don't have a catalyst. The market is on a hurry up and wait mode, and we're running in a lower volume. In low volumes, we can move really far, really fast. But with those low volumes, it's hard to get through any sort of resistance zones, right? Because liquidity usually resides on the other side of the pivot. So we can get there, we get into the liquidity, it's low volume, we can't absorb all of that liquidity, we fall back out again. Ten-day, 30-minute volume profile. 49.78 is where the pivot point is at. This thing is just a mess. There's no signal here for, like a classic D or B. We don't have any of the classic shape. We found support halfway through a shallow zone, which means we very likely didn't find support at all. One of our inverse markets or another market that we correlate with, that market hit support or hit a pivot or hit something that turned around, and then the S&P turned around. There's nothing here for us to hit. We moved through that zone really fast. Some days this thing just wants to do its own thing, huh? Yay. So we got this shallow area. We got this shallow area. We were able to move through it really fast. We didn't leave much of a footprint behind. So generally speaking, when we go back through them the other direction, we usually go through them the same way. We'll just fall right through them. And that's not what happened yesterday. So these shallow areas still exist. We still haven't left very much of a footprint, but if we continue with this sort of price action, then we'll start to build these levels out. They won't be so shallow anymore. That'll get us more into a classic D shape. Still expect 50-50 to be a level of interest. And we want to watch to see the point of control on the TPO, which is the blue profile here, to match up with the volume profile, which is the green one. Either the profile moves up to the TPO's location or vice versa, TPO moves down. We're going to lose more volume through the day today, but it's right through this general zone anyways. So it's doubtful that it'll be enough for us to bring the point of control up to this location yet. I think we would still need to lose more of Wednesday's and Thursday's price, maybe even all the way into Friday. If we lose enough of that, then we could see the point of control get brought up. VPOC was hit yesterday, so we're ready to move it, but we made a new VPOC level, so we'll just bring it down to this new spot. $50.95. Yeah, we don't have another one for a long ways. Still 0.75% above the 10-day moving average. We've kind of leveled out. If this morning continues where we rise back up, then we're going to be pushing back towards last week's levels. We're still 3% from the 10-week. Again, kind of just holding the line after fading back a little bit. If we make sharp moves today, then we could get back up to, closer to that 4% level, but it's not expected in this hurry up and wait environment. And really, we're coming right back up into Friday's close. We haven't done anything yet. Like a hamster on a wheel, we're just running in a circle. We're not doing anything. Waiting on data. So this is a really nice round bottom here. And I was looking for some examples to show you guys for cumulative delta. And this is definitely one that I wanted to show on a time-based chart, which is what I have in the upper right corner. This is a 5-minute chart. And I set it just after Globex last night. So came in at 6 o'clock. We started basing in the cumulative delta and then started rising back up, even though really we had a lot of chop through the overnight, right? We didn't really start rising up too much at first, but you can really see that cumulative delta. And yesterday, there was really great examples through cumulative delta helping us play those opportunities yesterday. You can get cumulative delta on different brokers. Even Thinkorswim has cumulative delta if you activate Thinkorswim's book map, right? So Right now, the book map, I believe, is doing the NASDAQ, but I did make a little homemade indicator for Thinkorswim too. You can check the Thinkorswim workbook. You should be able to find it in there. And if you search TradingView, they've got all kinds of cumulative delta indicators. So we're kind of spread out. I mean, really, we've got a reasonable distance from the put wall. That's not really an issue. And we've drawn away from that call wall quite a bit. So we don't have any of those major levels to deal with. We've just got this hurry up and wait situation. It's not going to be, a very clear, clean market to trade until we get out of this holding pattern. So we expect ranges to be tested, liquidity to be on the other side, the range to widen out like we widened out yesterday. And it wasn't much of a surprise to see us rising back up this morning. If we're in a hurry up and wait mode and this was the range, then we broke out of the top side. So we expanded it a little bit. And now we've broke to the downside and we expanded it just a little bit. And this range is just going to continue to expand a little bit at a time. We'll break through the top a little bit more. We'll break through the bottom a little bit more, right? And that's where the megaphone pattern comes in, just getting a little bit wider and a little bit wider as we build up more and more liquidity at this level until finally we get the data and the move is made. There's no edge in trying to guess which direction we're going to go. And if you was reading that founder's note from Spot Gamma, they were talking about how there's been a few events this year, three times this year, where we've been right on the edge of a real serious breakdown. And every time we've been saved, that last one was with NVIDIA and its earnings. So if you remember the day of the earnings, right, they reported at the end of the day. So all through that day before the report, it was a pretty rough day. The markets were down. Things were getting pretty nasty. NVIDIA reported and everything changed, right? We went ripping back up. The whole market buoyed to the upside. So we need these data points to come through. Bitcoin is still up again this morning. Behind them, we've got semiconductors, China ADRs, and the FANGs are up, or the MAG7, however you want to say it. KRE is almost up enough to meet our benchmark, just not quite enough yet. So more Bitcoin. And the semiconductors are in the Bitcoin space. I have this crypto watch list, and this watch list is based on the Smalls Exchange crypto product, right? So that was like an ETF. Opened the ETF, and these are the names that were inside of it. And you might notice it's got some semiconductor names in there. AMD, NVIDIA, Taiwan Semiconductors. So when Bitcoin's up, we expect to see semis up anyways. I mean, some of these look better than others, but at the end of the day, for a day trade, it won't matter, right? So we are starting to see a little bit of give back on some of these lower names. Mara's still up 8%, SOS 8.5%, but they're coming off a little bit. With these Bitcoin proxies, look to close this gap first and then see what they're going to do from there. There really isn't a whole lot to unwind here on something like Mara. You know, what are we talking about? Coming down into this zone again. Yeah, okay. It may be an $8 move. It's not that bad. But there's some that are really stretched out. Last in, first out, right? It's something you're going to want to be thinking about with these things. But let's get the gap closed first to see if it can stabilize this. A lot of these have built a really big base. And now that they've broken out of this pivot point back here, they need to hold it. It's like a cup without a handle. On the other side of that, a double top is supposed to go farther than the previous top to be a bull trap to get everybody in there so that, you know, you have to convince them to get in. That's why it's a trap. So you got to have the breakout. If it can Busby, come back down, test the top of this zone, and it holds, then we've got a nice move in a lot of these. Clean spark. I mean, it just go down the list. SOS wasn't even able to keep the breakout. Pot stocks are another one that's up this morning, not by an amazing amount, not like Bitcoin, but we do have pot stocks and the China ADRs. That would get us into things like Baba, Baidu, JD, PDD. Nice big gap up on Baba. The thing is, China's been doing a lot of subtle stimulus. And even though it's subtle, it's a lot. I mean, they've been going through an extraordinary amount of effort to provide some sort of stimulus. And you look at Baidu and you got to ask, is are they even getting anywhere? That's the best that they can do. How bad is it if this is as good as it can get after all the work that they've already done? So, a little bit of caution. There is earnings on Baidu on the 28th. So, careful what you mess with there. The options probably aren't worth it. They'll be too elevated in cost anyways. You'd have to go farther away than the earnings window. Baba's already done with earnings, so at least you can, you're on the other side of it. Still underneath a downsloping 200 though. So even if you were looking to, play a longer term China ADR, you've still got to get past that downward sloping 200. So it's very likely going to take some time. If you look at, more of like a Wyckoff pattern, then we've had the distribution. We're looking for the basing pattern before we start to really see that accumulation on the other side. For a day trade, I mean, we got 77.5 already. So that gives us an inside day breakout, and we're halfway through this big bar here. Well, more than that. We actually made it holding above it. So 77 is kind of a line in the sand. We want to see it hold that. what we definitely don't want is for it to fall back down into this zone. So it needs to stay out of this box. Now that it's gotten out, it needs to stay out. If it goes back in there, you don't want it as a long. You would have to get it back out of that box and now back above the high that it set here, 77.80. I mean, pot stocks are up, but I'm not seeing much flows here. Very likely just some algo prints moving things around a little bit. Yeah, I mean, it's not looking very productive. Wanted to point out this move in KRE yesterday. You know, that really kind of highlighted that move to the downside that we got. Earlier before the move, we were really looking for this to hold around the VWAP and work its way back across at some point. That's what we were really focused on, right? It kept testing VWAP and failing to get through, but it was doing a reasonably decent job of holding that low, kind of building a zone here or a range. And so the idea was that, you know, we needed to get above VWAP if we were going to see any sort of a comeback in the S&P yesterday. And instead, it started to flatten out at the open. That's what that hot pink line is that day's open. So it got right back up to where it opened, struggled there a little bit, and then, oh boy, it really just fell out of bed. So that wasn't like the only signal we had, but it sure added to the confidence of the trades that we were taking. And of course, the C-tick, it was a pretty nasty looking tool yesterday, but we had the green line in the middle with a nice sloped angle, like a fork pattern to the downside. It continues to work well, even though it's just a really weird indicator. I get it. When it was built, we never knew it was going to turn out to be that way, right? You can see with the ticks yesterday how we started a little bit above the green, but otherwise we stayed mostly in the red until the later part of the day. Around 2 o'clock, we finally started getting more up into the green again. But we had some of those good, strong tests of the downside. We didn't get into the minus 1,000, which would have been a really good kind of a reset for that low here. But on the weighted AD, we were holding around 100 to the downside. And the idea was we need to get below a minus 250 if we're really going to expand to the downside. If it's going to be one of those days, you know, where we get like a 3 standard deviation, 2 standard deviation move to the downside, like a flash crash worthy kind of day. You know, it hasn't been very long ago that we had a 2% move to the downside. So, you know, all we needed to do is break that low, but we didn't get it. Tested it a couple times. That 250 is a good level to keep your eye on. Same thing with a plus 250 if we were positive that day. You want to see a strong reversal or a strong recovery or a strong expansion on the day in the afternoon. You want to get past that 250. Bullish, then it'd be positive 250, and bearish should be negative 250. So if you look at what we started with this morning, it's what's up the most, small caps. And if you look at growth over value, we have this really big gap up this morning. follow the flows, right? So China ADRs, pot stocks, you could see a little bit out of the banking sector after that move in KRE. Otherwise, the indexes very likely aren't going to do very much, at least not your glamorous, sexy S&P NASDAQ. It's going to be the small caps, the Russell, maybe a little bit out of the Dow, if there's anything left in there other than the Mag 7 that hasn't made a good move. I wouldn't expect too much out of the Dow, though. It's hurry up and wait everywhere else, and that gives the small caps a chance to make a move. Watch the clock, watch the news. This is just a filler day, right? This is just they're just waiting on data. So we can move, right? There's always something that can come in and move the market, but the expectation is that we're going to hold the line and wait on data. In the major indexes. And if we're holding here, money's going to rotate. It's going to go to somewhere. Looks like it's the Russell, small caps, and the China ADRs and the pot stocks. Everybody, be careful, be safe. I'll see y'all tomorrow.